In a significant escalation of the ongoing U.S. China trade war, President Donald Trump has announced plans to impose a 100% tariff on Chinese imports, effective November 1st. This move comes as a response to China's recent actions, specifically their restrictions on the export of rare earth elements, which are essential for various high-tech industries, including electronics and defense. Rare earth elements, while abundant, are largely controlled by China, making this a strategic move with far-reaching implications for the global supply chain. Trump's decision to increase tariffs marks a tough stance against what he perceives as unfair trade practices by China. The president emphasized that the U.S. would no longer stand by while China restricted access to materials crucial for American industries. The president's administration has made it clear that this tariff is part of a broader strategy to address the trade imbalance and to counter China's growing economic power, particularly in key industries that rely heavily on these rare earth materials. Economists have weighed in on the potential effects of this tariff. According to trade experts, the 100% tariff could have serious consequences for the American consumer. Industries that rely on Chinese imports, such as electronics, automotive, and tech, could see substantial price hikes as the cost of manufacturing rises. The increase in prices would likely be passed down to the consumer, making products more expensive. Moreover, businesses that depend on these materials may experience disruptions in their supply chains, further impacting their operations and profitability. The long-term effects could include reduced consumer spending power and a slowdown in economic growth due to higher operational costs. In retaliation, China has already ramped up its countermeasures. The Chinese government has announced the imposition of new port fees on U.S.-linked vessels, effective October 14th. These fees will apply to American-owned, operated, or flagged ships docking in Chinese ports. The initial fee is set at 400 yuan per net ton per voyage, with plans to increase it each year, eventually reaching 1,120 yuan by 2028. These port fees are expected to add significant costs to U.S. businesses that rely on Chinese shipping routes, thus increasing the pressure on American industries already reeling from the effects of tariffs. The global market has reacted swiftly to the news. Following Trump's tariff announcement, the S&P 500 index dropped by 2.7%. Signaling investor fears about a prolonged trade war and its potential impact on the global economy. Financial markets are deeply concerned about the broader economic ramifications of the escalating trade conflict, particularly in terms of global supply chains, inflationary pressures, and reduced consumer demand. The uncertainty surrounding future trade relations between the U.S. and China has led to a sense of volatility in markets worldwide, with investors cautious about long-term economic growth. As tensions between the U.S. and China continue to escalate, it's clear that the stakes are high for both countries and the global economy. Experts believe that this conflict could have a lasting impact on global trade patterns, forcing countries to reconsider their reliance on Chinese-made goods and services. The imposition of tariffs on both sides is only the beginning, and both nations are preparing for what could be a protracted economic battle. In addition to the tariffs and fees, China's response has included other measures, such as restrictions on foreign companies operating within its borders, further complicating trade relations. Looking ahead, it's unclear how long this trade war will last, or what the ultimate resolution will be. While negotiations could still take place behind the scenes, the deepening divide between the U.S. and China suggests that a swift resolution may not be forthcoming. As the U.S. prepares to impose the new tariffs in November, both countries are positioning themselves for a long period of economic tension, with global trade networks caught in the middle. The fallout from this conflict will likely affect industries and consumers worldwide. From rising prices to shifting supply chains, the consequences of the U.S. China trade war are becoming more evident by the day. The outcome of this trade battle will reshape the global economic landscape for years to come, with nations around the world closely watching how the conflict evolves and preparing for its aftermath. In conclusion, the intensification of the U.S. China trade war represents a critical turning point in international relations. As tariffs increase and retaliatory measures take shape, the impact on both economies and the global market at large will likely be felt for years. For now, both sides seem committed to their positions, and only time will tell how far this economic conflict will escalate and how it will ultimately resolve.